Hey guys, just giving another few minutes for Toon to join in. Oh, he's here. Hi Toon, how are you? It's just two of us, I guess, right now. I can't see any listeners. Yeah, Toon, if you don't mind, can you share the space from your account as well, please? Hey guys, just giving everyone another couple of minutes to join in, and then we can start off.
Can I be co-host? I think space has changed a little bit, and it's hard for me to see who else is on and listening. Thank you. And how's my audio? I'm on speaker on my cell phone. Do I need headphones, or is it okay?
Headphones make it better, Tone. I mean, up to you. As of now, it's not that bad, but headphones do make it better.
Yo, Satwise, I see you're in here. Can you check your Telegram? I think you changed your Telegram accounts, and I just messaged you, and I want to make sure that I did message you because I'm going to be around your area all of next week. But I will also have no car, and I'll be like at the cabin working, so you may have to swing by my place if you want to have a steak.
Steaks and more steaks. Where are you nowadays, Stone? Where are you?
I'm in Panama at the moment. At the moment, I'm in Panama, but I got an overnight flight to the U.S. tonight.
Oh, any event or something that you're attending?
No, I need to get work done. I'm going to the cabin, and I'm gonna just be there like in complete silence by myself for like a week, and which is probably not gonna work because like too many people know where I am at this point. So and I'm already inviting people. So friends are gonna swing through, and I'll just be grilling my meat. So follow me on Instagram and Telegram for my smoking. One day there'll be a Tone Vase tequila bar and restaurant. Also, I hope people watch the interview that I did with Prosper. It was very, very good.
Is it available on YouTube?
Yeah, it's on my YouTube channel. If you haven't seen that interview, it's an absolute must-watch.
I will for sure. I haven't. I've been totally disconnected as well, to be honest, in the last couple of days. Too much work, too much.
Yeah, no, it should be pinned to my Twitter profile. So that interview might stay pinned on my profile for a while. It's a must-watch interview. People have no idea what is being built over in Honduras.
That's good. So people, if you haven't watched it, do watch. Tone, let's start off. We'll obviously keep getting people in as the space go along and as we get more speakers. And we have requested Joe Kalasari and a few others to join us if they have time. But yeah, let's hope they come in. But a lot to discuss because we have been away for a couple of weeks. You have been traveling. I have been a little busy over the last few days as myself, but well, lots of things have happened. So let me start off by introducing Financial Summit to everyone. Guys, welcome. So if you are new and you are not aware of what the Financial Summit is an event that's held every year, and the next one's going to be held in March 2025 in Maldives. So it's a place where you get to meet a lot of different people, traders, hedge fund managers, you get investors, you basically are getting physiotherapists, you're getting doctors, and a lot of people from different sides of the world come together to discuss finance. And it's not just crypto, it's finance as a whole. And a lot of other things like geopolitical things that are happening. We sit down, we talk. We can't take many decisions there. Obviously, nobody listens to us in the government, but we talk and try to share knowledge. There are a lot of presentations. And then the best part is the poker nights. They are tequila bars, they are poker nights, and there's a lot of more fun. Last time we did an ice bath, and that was something crazy, Tone. How many tons of ice did we use that day?
We kind of bought a little too much. We're getting better at properly optimizing. we played it safe and we bought 4 tons of ice. So 4,000 kilograms of ice was purchased, and the ice was still there the following morning, and we were in Dubai. So clearly we overdid it. So the following morning, people still could have taken an ice bath in the middle of the desert.
It was fun. It was fun. We tried it, and yeah, you literally feel scared initially, and but once you go in and you meditate and you let your breathing take over, it's so much more fun. So yes, let's move on to a lot has happened in the last couple of days. I want to start off with the most important thing: the CPI data, the FOMC meeting. CPI came in colder. I was surprised. I was not expecting a colder reading. I was not expecting such reading in fair opinion. I was expecting it to be 0, and a lot of talk was happening across the board. It will be flat. It will be as it is estimated, but it came down. First of all, what's your view on inflation at this point of time, with inflation now trying to come down?
Right. So let's be very, very specific.
If you don't mind putting headphones, your voice is cracking a bit.
Oh, sorry. Is this better?
Yeah, much better now.
Okay, it was a little further away. Let me, you know what? I'll just hold the phone in front of me for now. So let's be very, very specific about the CPI data. The CPI data came in flat. So 0% change in CPI from a year ago. Now, the CPI number, the actual number, still came in at 3.3%. So that means that inflation is running at 3.3% at the moment, year on year. So in 1 year, prices went up 3.3%. Now, it's exactly the same as it was a year ago. So 1 year ago, from the year before that, it was 3.3%, and right now it's 3.3%. So inflation is still high at 3.3% year on year for the second year in a row if you use this month as the barometer. What came in lower was expectation. So the government, or not the government, the market estimate was that inflation was going to come in at 3.4%, but it came in at 3.3%. And somehow this is incredible news. It's not. It's not incredible news on multiple fronts. First off, 3.3% year-on-year inflation is still a very high inflation. When the target is 2% and you're coming in at 3.3%, you are 65%, I'm estimating here, above what you want, right? So you're off by 65% on your target. So 3.3 on 2 is super high, okay? The other thing is that inflation is not coming down. It was 3.3% this month a year ago, and it's 3.3% today. So the only thing that came in positive on this inflation number is that people expected 3.4 and they got 3.3. And somehow this was such great news that the market rallied like a bandit, because this smaller, the actual number versus the expected number being negligently smaller somehow gives people confidence that the Fed is going to lower the Fed funds rate. Now, we have that, not a bet, but we have this, we have I guess the debate with Joe, where we both,
you can't run away to it is a bet.
Maybe it's a dinner, because I have another bet with Joe.
Bet. Whatever wager you want to put in there, that's up to you. It is a bet officially.
I forget how many bets I have with Joe on dinner. We have another one over politics and whether Trump's going to be on the ballot or not, but that's a whole different discussion. But so we both think that the highest probability thing that the Fed will not lower the rate. But if the Fed does lower the rate, Joe thought it would be either this past meeting or the meeting coming up. And I think it's going to be one of the two meetings after the meeting coming up. So I think the next meeting is the September meeting, or is it no, the next meeting has got to be July. And then the one after that is September. I'm going to check right now. I have the computer in front of me. The next meeting is July, end of July. And the expectation is 14% that the Fed will lower rate at the next meeting. September comes in a lot, way higher probability that the rate would get lowered. So I think those are the exact numbers, right? So there's three metrics, and I know I'm repeating myself. The three metrics are: how high is inflation? How has inflation changed from the year before? And what inflation did we get relative to the expectation of what inflation we were going to get? Only one of the three was lower by a negligible amount. So in reality, things are not good. Inflation is still high, and I don't see why the Fed would lower rates, other than the Fed keeps promising that they would lower rates this year. And if the Fed doesn't go through on their promise of lowering rates this year, people are going to be very critical of the Fed. So I do think they're going to lower rates at the end of the year because they've been promising all year to do so.
I am totally with you on that, tone. Like, inflation is not down. The markets have rallied on the number that, oh, it's lower than expectation. It's more like, oh, we were expecting it to go higher, but now it's lower. So let's pump the market. So I do understand that point, Tone. But the point being that there was a period in which the inflation was going higher. Now, year on year, the inflation hasn't changed. I understand it's not coming down, but at least it's static. It's not going higher. Isn't that a win for Fed in a way?
Yeah, it's a small win. It's a negligible win.
Tone, you there?
Oh, sorry. Did you not hear me? It's a small win. It's a negligible win.
Exactly my point. Like, it's a negligible win, but it's a win. A win, like, they will take it as a win. And I think Biden, on the other hand, even though he knows that he's not getting elected, is going to take it as a win that, oh, look, we have strangled the neck of inflation and all that. Now, I'm not going to go into the market, Stone. I really want to discuss these numbers and the FOMC meeting as a whole first, and then talk about the markets, because there are two reasons why I'm pushing it a little, further into the discussion. Number one is that there was a huge, there was no correlation between risk on assets. Some of them pumped, some of them didn't, and we'll talk about that. Number two, I think the markets did not pump on this inflation number. There were several other reasons that were happening behind, because of which the markets are performing the way they are, and we can come into more detail. But let's go on to FOMC, Tone, first. How did you see the decision? I'm sure you're not surprised. You were quite sure about what to expect. But from your perspective, the press conference, the nature in which Powell came out, you were doing it live on YouTube, if I'm not wrong.
I think it was the most boring, uneventful speech and Q&A I've seen from the Fed. I mean, usually they're boring. This one took it to a new level of boring, because he can only say the same thing so many months or so many meetings in a row, and this one was just completely useless.
Okay, that makes sense. But from his points, like, is there anything that you found which was interesting? Let me read out the summary from their Fed meeting. So obviously, everyone might be aware, we are a little late. Sorry about that. Fed has left the rates unchanged for the seventh straight meeting, right? Officials raised the 2024 inflation target or forecast from 2.4% to 2.6%. So that's officially raised now. Median forecast is showing just one rate cut in 2024 this year, even though major banks are still expecting 2 rate cuts. I'm not sure where they are getting their analysis from, because they have been terribly wrong this year. And Fed says that inflation has eased, but it's still elevated, as Stone just mentioned. And the last point is that the median 2024 core PC inflation estimate is up from 2.6% to 2.8%. So these were the major things that came out from the minutes. Not the minutes, to be honest, the initial release. So, Tone, Fed is being clear. We do not expect more than 1 rate cut. right? They're promising one. It's like they've been doing it from the start of the year. How have these major IBs who have been talking about 4 rate cuts, 5 rate cuts this year been so terribly wrong? Like, they have been publicly stating it.
Well, I'm not going to say they were wrong, right? Well, we were right, right? Like I've been saying all year, since January 1st, there's no way in hell the Fed is going to lower rates 3 times, right? I've always said it will be at the most 1 time, pending some catastrophe, right? Like, so I have one of those force de jour clauses, right? Which I never knew what force de jour meant until COVID came, and I had these events, scheduled at these high-end resorts with Financial Summit. So force de jour means if there is some kind of a crazy thing going on, like a war or act of God or a natural disaster, pending one of these globally catastrophic events, I did not foresee the Fed lowering the rate 3 times, once at most. So far, I've been proven very, very right. Joe has been proven right, and other people on this space have been proven right on that. Now, I'm not going to say that the Fed was necessarily wrong. The Fed will never admit this. But one of the jobs of the Fed, the unwritten rule, the unwritten function of the Fed, is to give confidence to the economy. The best form of confidence given to the economy is higher prices in the stock market. The stock market making all-time highs is the ultimate confidence booster for an economy. Like Joe Biden can stand there running for re-election saying the stock market is an all-time high, the economy is doing great. And I know a lot of people hate comparing the stock market to the economy, but I disagree with that. I think the stock market is an incredible reflection of the economy because most companies that are in the stock market are large companies. And if large companies are having the highest stock prices possible, that means these companies are doing very good financially. If these companies are doing very good financially, they are hiring people and not firing people. Yes, there are instances where company stock prices rise when they fire people, like Facebook is an example, when they got rid of the adult daycare center of free lunches and people just hanging out and not working. So there are instances where your stock price will rise when you get rid of a bunch of useless high-paying employees and replace them with, let's say, some automation like AI. But in general, like for example, if the stock of Walmart is rising, yeah, they're probably hiring more employees. And if the stock is rising, it means the company is doing better. So in general, I think it's a decent correlation. So going back to the Fed, one of the functions of the Fed is to give confidence to the economy. So if the Fed knows, because it's been engraved in every investor's head, that lowering of rates is better for company stock, the mouthpiece of the Federal Reserve constantly wiggling a carrot, saying that we're going to lower rates, gives investors confidence to buy stocks, which hence gives more money to the corporations, which are more comfortable hiring more people because they have more money to spend. So, or expanding their operations. So it's not that the Fed is necessarily wrong, but if you take 3 things, the Fed is lying, and they're so incompetent that they were so wrong about what's going to happen at the end of year with the rates. The Fed knows they're probably not going to lower rate, but they're just being optimistic and keeping that confidence going. So I would say it's the latter. I think they deep down know that they have to wiggle this carrot, that they will eventually lower rates, and they will eventually lower rates. Because if the year comes to an end and they haven't lowered rates at all, and people start giving them a hard time about, well, you promised it would lower it 3 times, but you didn't lower it at all, they can say, well, we didn't need to, and look at the markets, look at the economy, look how strong it is, nothing is breaking, We're not raising rates, so be happy. And we promise you, we will lower rates this year in 2025, right? And then they can keep the whole charade going another year.
No, agreed. But Tone, when we are talking about all these conspiracies and all these catering to behave, changing things the way they are doing it, like making things work the way they want it to work. Now, there was a comment that came out this week stating that the job numbers, which are looking, job. There was a lot of things about that it has been asked to change the job numbers, like that the job numbers are incorrect. That was Powell's statement, that he doesn't think that the job numbers were correct. Right? This is not his words. This is the interpretation of my brain when I read his comment, that I felt he's trying to say that the White House is trying to basically manipulate the numbers. Have you read that story? Have you given any thought to that story?
I have not read the story, but I have said this also on Spaces, that this administration, this current Biden-run administration, is probably the most least trustworthy that has ever held office. And whichever economic government numbers, whichever ones are closer to control and oversight by the Biden administration, the more likely these numbers are to be fraudulent. So again, as an example, the Biden administration has very little control and oversight over, say, the CPI number or the PPE number or the Michigan sentiment, but they have a lot of oversight and control over the GDP number. Okay, so the GDP is on one extreme, and the Michigan manufacturing index is on the other extreme. CPI is closer to Michigan, and the job numbers are closer to the GDP number. So the closer the number is to the president's administration oversight, the more likely that number is to be fudged and be fraudulent to help in the case of re-election. I have stated this last year and probably the year before, and I continue believing that. I don't need to see an article saying that. That's what I've always said myself. If there is some kind of evidence and proof, great. The problem is no one's going to read it. No one's going to see it. Mainstream publications are not going to publish it. You're not going to see this in the New York Times or Washington Post or any of these other government-controlled media outlets.
No, yeah, no, agreed. I mean, I come from a country where I've seen numbers being manipulated as well. So, and we basically talk about election numbers. That's bigger. That's a whole 5 years of governments. So, yeah, I can understand what you're trying to say with that. So, Tone, moving on from CPI, from FOMC, and the next day we had PPI. We had PPI come in at minus 0.1%, if I'm not mistaken. Month over month was minus 0.2, if I'm right. And expected was 0.1% increase. Now, first of all, Tone, if you can explain to our audience what PPI is, because I think personally, PPI has a major impact on inflation. It's a very useful measure. So if you can explain to them what exactly PPI is and what this number, even though it's not major, could seriously have an impact.
So PPI is the producer price index. Okay, so when what's the best way to explain it here? So it's kind of like the measure of change in producer prices that kind of build shit. Okay, it is a measure of inflation as well, but at like the wholesale level. And it's usually it's super critical when it comes to like housing and construction. So is that like the best way to explain it?
Yeah, I mean, I'll just add to it. So PPI, guys, is basically how much does it cost the producer, who is basically manufacturing things, to buy the products that they want to buy to create whatever they want to create, right? Now, in a normal economy, if we were in a normal state, it would not have much of an impact because we are in a normal state or deflationary state, not really much of an impact. But when you're in an inflationary state, what really happens is if the producer is buying something more expensive, he has to raise the price to basically keep his profit margin or reduce his profit margin. So there are only two outcomes, right? Reduce your profit margin or increase the price to keep the same profit margin. Now, a company will never sell you things on discount. Like even when they say it's 50% off, it's not really 50% off. We all know that adults or wives still don't. My wife at least still doesn't understand that concept, and she thinks it's sale, so that means it's cheaper, but really it is not. And what really happens is when the PPI goes lower, now they are getting things cheaper. So logically, they can either make more money on whatever they're selling, or they can discount it out for us. So which can have impact on the future CPI numbers in one way or the other. So Tone, they just wanted to explain it in much more clearer words.
Yeah, thanks. I wasn't exactly ready for that question, so it's but yeah, it's basically the inflation on necessary goods for producers to provide you with the product, and if the price of wood is skyrocketing, then PPI is going to be very high, and that means building a house is very expensive, and you're going to have to pay more for that house.
Exactly. Well, Joe is sitting in listeners. So Joe, if you have time, come on. We were having a chat yesterday. To be honest, we've been having a chat on our group message over the course of the last 1 week and discussing how the market is going. I really want to discuss the stock market now. Like this is the main part because there has been a huge divergence between how crypto has performed and how the stock market has performed, both being risk on and risk on assets, right? I basically put them in two brackets, Stone, ultra risk on and risk on. That's how I kind of put them. Now, we have seen a massive rally, like over the last 2 weeks in NASDAQ and S&P. First of all, let's bring in Joe. Welcome, Joe. How are you doing?
I'm doing great. I have a call. I got to jump on in a second, but I wanted to say hi to everybody. Hopefully I can come back after a short call. But
please do whenever you can.
Man, I think some of this action you're seeing in the indices has me incredibly bullish, right? Like the NASDAQ looks like it's on fire. And I think everybody's underestimating the pump we're going to get here on NASDAQ, especially with NVIDIA. NVIDIA is just ripping. There's one indicator that I look at in particular. It has nothing to do with like the price. It has to do with price action, but it's really sort of a positioning, more of a positioning indicator on NASDAQ, and it's flashing like NVIDIA 200. So I'll actually tweet this out because I hesitant. I'll send it to you both in the DM. But NASDAQ just looks incredible here. I'm very bullish NASDAQ.
No, 100%, Joe. Also, I saw your chart on Twitter about NVIDIA and BTC 7-year low. That's going to be fun. People who invested in BTC for those early, past gains are now thinking, "Oh, should have bought NVIDIA instead."
If you have a huge NVIDIA position, okay, not financial advice, and you have no Bitcoin, it seems crazy at this differential right now. It seems nuts.
Yeah, 100%. So, Joe, if you can join us back, that would be great. Really looking forward to this discussion. So, Tone, let's take it forward. NASDAQ is crushing it. Let's accept it that this rally was not expected, right? Everybody was saying we are in a bull crab market. It's not going to go up. Even Joe was of the favor that we are going to be going sideways for a little bit. But then came the last 2 weeks and it just smashed everything. Literally smashed through. It is performing better than any asset right now. What's your take on NASDAQ, Tone?
Yeah, I mean, look, I'm bullish on all stocks, whether it's NASDAQ, whether it's Russell, whether it's Dow Jones. And it doesn't matter. I mean, obviously, Russell is lagging, and the NASDAQ right now is leading. Early in the year, Dow Jones was leading, and the NASDAQ has caught up with a vengeance, and now the NASDAQ is the leader. The S&P has always been in the middle, and the Russell has always been the lagger. Now, this dynamic tells me a couple of things. Whenever the Dow Jones is leading, that signals international capital driving the US stock market. This is something I picked up from Martin Armstrong's work on economics. Now, whenever the Russell is leading, that's an indication of domestic speculative capital driving the market because the Russell has the lower cap stocks. Now, when you have the S&P leading or the NASDAQ leading, that's an in-between. That's an indication that it's both domestic and international because they like the big names that everyone knows. Now, because the NASDAQ has become like the biggest companies are now in the NASDAQ, the reason why the NASDAQ is leading is because there's very few tech companies in the Dow Jones. So it's very possible that international capital historically has been driving into the Dow Jones. But because of technology and the modern age, I remember Martin Armstrong is like pushing 70. So it's very possible that international capital is not only entering the Dow Jones 30, it's also entering the top 10 to 15 NASDAQ stocks. And those NASDAQ stocks are so dominant within the NASDAQ 100 that they are driving the NASDAQ 100. So I would say that a lot of this big driver is international capital primarily, and domestic capital not far behind. Now, I'm not saying there's more money entering the US markets internationally than domestic markets. What I'm saying is as a relationship. Right now, Europe is in serious trouble. From no matter which way you look, economically, politically, militarily, meaning that and capital is leaving Europe. And that capital needs to go somewhere. It's not going to Russia. It's not going to China. It's not going to India. And it's not going to Canada. Where else would it go? It finds a home in the United States. So in the US stock market, because Europeans have lots of access to the American stock market. So I would say in the last year or two, it's been a lot more money flying in to the US from Europe than it would have been had the Europeans took the opposite approach to the Russian conflict in Ukraine. Had the Europeans chose to integrate Russia into the European economy and broke ranks with the United States, the situation might have been different. The tension between Russia and Europe would not exist, and Europeans would be more comfortable investing in the European economy because the gas pipeline would be flowing with Russia. They could have been on good economic relations with Russia. They could have gotten discounts on Russian gas. I mean, if you go back in time, imagine what kind of offer Russia would have given to Germany on what kind of discount Russia would have offered Germany on natural gas through the pipeline had Germany came to Russia and said, look, we are willing to negotiate really tough with the United States. We are willing not to do everything the United States tells us, and we're going to take a chance at potentially being on tensions with the US in exchange for significantly cheap Russian gas. Now, obviously, this would have never happened. Germany started to be dominated by the Green Party, which is an energy party, which is the party that thinks that if we went back to living in the Amazon rainforest, everything would be great. They don't want nuclear energy. They don't want any fossil fuels, no gas, no oil. They want people to, I don't know how they're going to cook because burning wood to cook your food releases more carbon dioxide in the air than using natural gas, but they don't understand that. So I don't know how they want people to heat their homes or cook food. I have no clue whatsoever. But had Germany gone in a different direction, Germany and other European nations around Germany would have had ridiculously cheap energy. Their industry would have been in a way more competitive position. And there would be no need for European capital to flee Europe. But they chose a different path. And I think that capital is finding a home in the United States, helping to drive the stock markets higher. And whenever an asset is being driven higher, for whatever reason, people want to jump on the asset, whether it's the stock market or whether it's GameStop because some cat on Twitter came back.
Don't say
Or
that.
for whatever reason.
Don't say that. The poor guy tried to do a live stream. He even forgot how to do one. But yeah, that was one of the topics I wanted to talk about in this space. Yeah, to be honest. But yeah, let's go to some good topics, and then we'll have some fun with GameStop. So S&P to the GDP number is currently at all-time high. There's a chart. There's a ratio chart for S&P to GDP. Yeah, guys, if you didn't know that, look at it. So it's at all-time high. Not so relevant, but still, it still reflects a little bit.
So I don't see that chart. I don't see any pinned tweets
No,
in the
so
nest.
Tone, we are facing
So-
difficulties. So this has been happening for the last two spaces. I'm not able to pin those tweets for some reason. But
Okay. So what am I googling here? GDP to S&P ratio?
S&P, if you type S&P and then /GDP.
Yeah, I can look at it, but I mean, on the internet, I mean, these charts could be outdated. Is this something I can pull up on
Yes, you
TradingView?
can. So SPX/GDP. GDP.
Got it.
Yeah.
SPX/GDP.
Yeah. US domestic
Yep.
product.
But GDP comes back as...
No, there's a GDP, gross domestic product, from BEA. You might have clicked on stocks or something because I can see the chart.
Hold on. That's okay. You have to describe it for me. I don't want to spend too much time trying to pull it.
It's basically a chart of S&P's performance in relation to the gross GDP value of US. And it's currently going through the roof. It's just literally in a massive, massive uptrend. So S&P is outperforming the current GDP state of United States. So even though the GDP is not rising so much, S&P is still blasting off. So that was one of the charts. So I just wanted to ask you that how do you see it? Do you even give any importance to these charts or you just ignore them?
I generally ignore them because GDP is not going to rise. GDP almost never rises. GDP is approximately the same all the time. It's kind of like inflation. It's approximately the same all the time, except during the stupidity of COVID lockdowns that caused the current spike. And now inflation is about the same all the time. But the stock market is always going to go higher because at the very least, the inflation number is driving the stock market up. And so I don't really care about the GDP to the S&P. I'm expecting the S&P to double this decade, and I'm not expecting GDP to go up at all. So I don't know what this chart looks like, but I doubt I would find it interesting.
When I see it again, it literally looks like S&P. So yeah, let it be. Looking at it again, I'm like, yeah, this is S&P chart. I don't need to care about GDP. It's like a non-significant number in there. So that's fine. Still an education for me as well as others like who didn't know that this chart existed. And I saw it and I was like, yeah, makes sense. But now I see it, I'm like, to be honest, not really. Moving on, Tone. Magnificent 7 at this point of time stand at around 32% of the S&P. And they are rallying hard. Technology stocks have hit another all-time high relative to the S&P. Dixie is also at its highest level in the last 1 month. So that's also flying. Like it's like people who think that there's a correlation between Dixie and the stock market. Well, there you go. There's no correlation that exists. But the most important thing are the three companies. One we have touched upon is NVIDIA. They had a 10-to-1 stock split. We initially, when the stock split happened, I thought there might be some sort of consolidation in the chart. But well, it doesn't. NVIDIA doesn't believe in that. Then comes Apple. Apple has seen a golden cross. This is the first time it has seen one since March 2023. and it has posted its biggest 3-day gain in over 4 years, hitting all-time high and performing brilliantly, right? This whole pump tone was based off AI, Apple's new intelligence, even though Elon Musk came out and said if Apple integrates AI at the OS level, he will ban all iPhones to be used in his firm and he'll put it in a Faraday cage upon entry. So these were his comments. So first of all, Apple, look at the chart. Tell us, what do you see? Do you still expect Apple to keep going higher, or is there a reversal coming soon?
So from a technical analysis perspective, Apple chart looks absolutely incredible. It had a double top between July of 2023, and then the all-time high top was July 2023. Then it double topped in December of that same year, and now it came back to that high. This is the $200 high. It came back to 200 in June. So for 1 year, it tried to cross that number. And the $200 high in 2023 twice is not that much higher than the $180 high that it hit in December of 2021.
Yeah.
So the chart of Apple is incredibly bullish after what you can say is a multi-year consolidation.
Agreed.
Now,
sorry, I said agreed. Sorry, I was not muted. I was talking to myself.
Okay. And so TA says Apple needs to go way higher. Now, the reason for this breakout above 200 was Apple saying something about AI, which seems strange. Apple is a technology company. If you are a technology company that is not focusing on AI, you need to just shut down your company. If you are not a technology company, but you are a publicly traded company, you also need to be focused on TI, no matter what your company does. I mean, AI. I mean, AI is everywhere. It's kind of like not paying attention to the internet 20 years ago. So, or 25 years ago now. Like every company will have an AI component. Now, if you're a technology company, you are more of the pioneer of what that AI will do. While if you are not an AI company, you are more of a consumer of the AI product. But every single company should have an AI division. And yes, a company like Apple that hasn't innovated anything except finally changing the input plug on their cell phones to be what the world has been using for a decade, they really need to get on a ball here and do something innovative. And I guess, in my view, people are so desperate to see Apple do something innovative that they just rushed into the stock. Personally, I think it's currently grossly overpriced. I don't think this news that Apple is going to do something with AI warranted a 10% stock rise, and you already see it pulling back. So I think Apple price is going to come back down to 200, but yes, it's going to trend up. They are a technology company, and they should be working on an AI product. I just don't know how much innovation is going to come out of Apple, and I've been saying that for probably close to 7 years now. And Apple has been kind of stuck for the last few years. I mean, look, Apple hit $180 in 2021, and only on this announcement did it make a significant high. You can say that if a week ago we looked at Apple stock is literally would have been up just 8% since December of 21. We're halfway through 24. That's not a lot of growth.
I agree. Totally agreed on that. Apple as a company, I don't like it. I don't even use the phone, guys. I'm the one guy who has Android. And I was surprised at the AI announcement. And I was listening to WWDC and I was like, they are not doing anything, major. It's not major. So why? It just smashed through. And I'm like, okay, missed out on a trade, but that's fine. Many more to come. Moving on to Elon Musk, Stone. Few things that might have happened. I'm sure you would be aware. If not, then let me share it with the audience as well. Starting off with the 56 billion payout, I voted yes, Stone. You are aware I've been a long-term investor in Tesla. and we were chatting about it on the research chat as well, that I like Tesla as a company. I think Tesla is the future of automation, of vehicles, of robotics. There's a lot of things they can do. So that's Tesla. 56 billion payout. First of all, is it justified, Tone? It has been voted yes. He is getting it. So yeah.
Wait, I'm sorry. Which part is it justified? Is the question?
$56 billion payout for Elon Musk, but not payout. It's like his kind of incentive in a way.
I mean, whatever Elon Musk is getting paid, it's worth.
That's the perfect answer. That's a short and perfect answer. Number two.
I mean, it's insane that there is this lawsuit claiming that Elon Musk makes too much money. It's retarded.
Yeah, it is. It is. I mean, look at the performance of the company overall over the last 5 years or so. They have kind of become one of the major players in automobile industry, and then now they are basically transitioning into a robotics company. Like they have a clear path, and he has been now like putting it out in front of people on X, on Twitter, that they want to, every household in next 5 to 7 years will start having robots. Like this was his thing that he said, and I was like, okay, I would like a butler or something at my place. So that's one thing. Number two, Tone, his comments about Apple, that he, and to be honest, not just Apple, Tone, his comments about AI. Obviously, Twitter has implemented their own version of LLM, which is Grok, right? You have ChatGPT, and then you have all these other companies, Gemini. You have ChatGPT, you have Gemini, and then Apple and Microsoft are using OpenAI as it is, ChatGPT. But what his comments were, that AI as a whole is being trained to be politically correct, right? It is not being given the freedom to think on its own, to basically work for humanity in that sense. How do you see, Tone? How do you see like LLM or AIs in your life? Do you use them? Have you used them before? And if you have, then how do you see it? Like, is it politically correct way too many times?
So I don't use AI chat. Like I've never used ChatGPT. I've never used any of that stuff. I mean, eventually I will have to start. I have not really used it. I find them to be very biased and very woke for two reasons. One of the reasons is the bias of the developer is usually on the woke side of the equation. And it's not even the fault of the developer; it's the fault of the education system in the Western world over the last 2 generations, right? So most people are of woke ideology, which is unfortunate, and it takes you spend 20 years being educated, and then you got to spend at least another 10 years being uneducated from the woke garbage that they teach you throughout your entire schools. And obviously, the sooner you start to remove that nonsense from your brain, from elementary school, middle school, high school, university, graduate school, obviously, the more time you spend in school, the harder it is to reverse the trend. And then who knows how long it takes you to realize how woke you are after you're done being brainwashed in the Western educational system. And it's possible many people never get to that point, right? You finish your schooling, and then you go and get a government job, or even not even a government job, or you don't want to be anti-woke because somehow it hurts your business for whatever reason, right? So it's very hard to reverse that. So therefore, by default, the majority of programmers programming AI are completely woke, and that's going to be the bias in the AI. That's reason number one. Reason number two why AI is very leftish bias and woke bias is because the best thing that these AI like ChatGPT can do is go to the open internet and find the answer. And the open internet is completely censored by the same woke ideology. So even if you get a programmer that programs an unbiased AI, unlikely, that unbiased AI will give you a biased answer towards wokeness based on what it finds on the internet. So therefore, they are useful in some ways. They're very useful in helping you rewrite things. They're useful in doing unbiased things. But anytime you ask it a question, anything related to the wars, for example, whether it's Russia, Ukraine, whether it's Israel, Gaza, whether it's any sensitive subject, it's going to give you an answer towards with left Marxist and woke bias.
I agree. So there have been a lot of people have tried to ask him questions about wars, about scenarios where, I not on our spaces, but like I'll not put it on the spaces as such, but a lot of questions which could have been, the answers were pretty clear, like whether you'll have a nuclear war or you'll have something else. And it went with something else because that was more politically correct or more woke mentality, to be honest.
And this is very, very easy to prove. Anybody can prove it. If anyone ever watched the YouTube channel called Redacted, Natalie Morris, she does this all the time. And she shows you screenshots where she would ask an AI a very specific question and that she knows the answer to. And it was a complicated question, whether it has to do with the vaccines or it has to do with COVID or it has to do with the political side. And she asks all these questions and she sees the answers that ChatGPT or some of these other open or some of like the Google one. The Google one is actually one of the worst.
Yeah, that's the worst.
And she gets an answer. And she knows that the answer that the AI gave her is factually wrong. So she literally copies a part of the answer from the AI and re-asks the question, where did you pull this information from? Double check if it's factually accurate. And then the AI will specifically reassess its own answer. And then it'll answer it like, oh, I'm sorry, I made a mistake. You can literally tell AI that the AI is wrong to double check their answer, and they'll admit that the answer is incorrect. But most people don't do that. They don't take that extra step because they don't do their own research. They're going to depend on AI. So this could be very potentially dangerous. And like I said, the problem is the developer doesn't realize how biased he is. And two, the sources are biased. So how accurate can an answer possibly be when it comes to controversial topics?
No, thanks for your view, Tone. I think, I vibe with that view as well. So I think that is correct. And I think the way Elon Musk is developing Grok, I think that would be a lot more closer to what AI should be. It should have a personality of its own, but on top of that, it should give you the right answer, factually correct, based on situations. Yeah. Tone, the last part of this segment is DXY. That's the one chart which is not breaking all-time high. So if you can give it a quick look and tell us from the TA perspective, what do you expect from DXY in the coming few days or coming few weeks overall, and how do you see it going?
I'm sorry, repeat that again?
Could you analyze the chart of Dixie, if you don't mind?
Oh, Dixie, I missed the ticker. Okay. Let me open that up. Sorry. Yeah, I haven't looked at the Dixie in a while. Oh, it looks good. It looks bullish. Looks like the dollar had a huge rally off of the Fed announcement this week. And I don't know if you watched the show I did with Mark Wood. Mark Wood does a bunch of analysis, and he feels that there is a high correlation between Bitcoin and Dixie. And when Dixie rises quite a bit, that tends to drag Bitcoin down. So this could be, one of the reasons why we're so frustrated with the price of Bitcoin at the moment.
Well, I disagree with the correlation there, but at this point of time, that correlation is living up to expectation, so I can't say much. But I it depends on how you see Bitcoin, right, Tone? Like if you see Bitcoin as a currency, and the point is that Dixie does not take into account Bitcoin in its calculation. So the correlation, it just doesn't look quite obvious. So yeah, I mean, that's the only point I have for, like the correlation part of it. I feel that it's very much independent. The crypto market is more dependent on risk off assets. And getting on to the last segment of today's space is the elephant in the room: crypto market, the Bitcoin market, the Bitcoin chart tone. First of all, let's look at the chart, and then I have a lot of questions, a lot of things to discuss. So let's just analyze the chart first, Tone, if you don't mind. Bitcoin.
Sure. We took another drop today. Bitcoin is sitting right at very critical support. As of the last couple of shows, I started to anticipate that Bitcoin would go down to this $65,000 area. There is lots of support on all time frames in this $64,000 to $65,000 area. I was hoping we wouldn't drop there today, but the weekend is coming and things tend to consolidate over the weekend. We also have an MRI buy opportunity on the daily coming in, I believe, on Sunday. My computer is acting kind of slow again. I probably need to just restart the computer. And we're sitting on support right now. I think 64,500 is as low as I want to see it. If the price of Bitcoin starts closing the daily candles below 64.5, I will significantly reduce my 100% bullish allocation. For now, I'm keeping the 100% bullish allocation through the weekend, anticipating that we will rally next week. My other major concern is last week, the Bitcoin ETFs bought 26,000 Bitcoin. This week, the Bitcoin ETFs sold about 5,000 Bitcoin. The $25,000 purchase moved the price up maybe 3,000. The $5,000 Bitcoin sale pushed the price down about 5,000. This is concerning. I really want to see these ETFs. I want to see the number more balanced. A 5,000, a 25,000 Bitcoin purchase should drive the price higher significantly, and 2,000 to 3,000 Bitcoin sale should barely drive the price down. But instead, we have the complete opposite. A small sale crashes the price, and a large buy barely moves it up. Now, eventually, there will not be enough Bitcoin for these ETFs to buy, and I think the price can go from 70,000 to 95,000 in a matter of days. But until we get there, it can take a few more months.
No, yeah, makes sense. I am looking at the same. Honestly, the analysis is very similar, Tone. I'm looking at around 64,000 area. For you, it's 64,500. For me, it's 64,800 to 64. That's the lowest. Like, it's a similar range. I don't expect Bitcoin to go lower than that. And if it does, then yeah, I have to reconsider my positions as well. A lot of equal highs over on the top side at around 70,000, 71,000 something mark. So it will attract price. A lot of leveraged positions will have their stop losses. Short positions will have their stop losses now in that range of 71,700 to 74. So yeah, hopefully that is attractive enough for market makers to grab hold of some free short positions. Okay, so this was a chart, Tone. First of all, the correlation between risk on assets. NASDAQ pumped, S&P pumped, Dow Jones pumped, Bitcoin pumped, and then gave away all the gains on Wednesday. After that, we basically saw a little bit rally yesterday, day before, and then again, 2 back-to-back days of negative price action. Now, how are you seeing, like, this normal understanding of correlation is very much broken right now. And because of this, do you think Bitcoin is now becoming the catch-up trade for NASDAQ? Like, NASDAQ has pumped, it has given the gains. Maybe it's going to consolidate and the money is going to flow into Bitcoin?
Well, I'm not going to go that far, right? I'm not going to say the correlation is broken. I think the correlation is still okay. Bitcoin is just a very volatile asset. And because of that, Bitcoin can catch up. I mean, Bitcoin can catch a bid right here early next week, and Bitcoin could be at a new all-time high by the end of next week. It's very, very possible. So I wouldn't claim that the correlation is broken just yet. I would rather look at Bitcoin on a monthly candles and weekly candles to monthly candles. And I still say it's pretty damn correlated to risk on assets.
Joe, what's your view on our favorite topic of correlation between NASDAQ and Bitcoin? Do you think Bitcoin is the catch-up trade now?
So Bitcoin.
Oh, excellent.
I'm sorry. Can you hear me?
No, I said, oh, Joe's here. Excellent. Go for it.
Yeah. So Bitcoin's selling off hard today, and it sold off hard the other day after we got the rates decision. And what I thought was fascinating is, you know what else sold off very hard? IWM. Both the other day and today, IWM. In fact, I actually put a tweet about this the other day. The chart and the pattern and the peaks and the rips. Throw up a chart of the IWM and look at some of the recent price action and look at it compared to Bitcoin. And I know Tony and I disagree with this, so we can table the discussion, but I do think Bitcoin is sensitive to rates. It's sensitive to forward expectations of rates, where they're going to be at, particularly at the short end. And there's a variety of reasons for that, in my view. But aside from that, why are small caps selling off while you have the large caps, particularly the mega caps, are ripping? Is because they're not interest rate sensitive at all, right? They basically can print their own money because of their balance sheets and because of the cash flow issues and because of how dominant they are. Whereas a period after we got from the FOMC, where they're pricing out the cuts, right? Powell now says that he said something like, I wouldn't expect more than one cut this year. Just as an aside, they did the dot plot, right? This is the range of FOMC members. One member thinks you get no cuts this year and you get no cuts next year. Another member, who's off in La La Land, I think, says between here and the end of next year, you're going to get 10 cuts. You're going to bring the Fed funds back down to 2.7%. That shows you that even they don't know the path for forward cuts. And you got to remember, we came into this year where Bitcoin was doing extraordinarily well. Small caps were ripping as well. And the market had priced in 7 cuts, which Tony and I, if you listen to these spaces, we were in total agreement that was lunacy. It was just absolute craziness that with this economy and the economic data we have, which is not recessionary, at least not in the near term, that you're going to get 7 cuts. So from my perspective, I think that the Bitcoin price action and small caps, which are very interest rate sensitive, are responding to the Fed's basically disappointing the market yet again, saying we're not getting cuts this year. Now, Tony is exactly right. Like, I think that just because we don't get cuts doesn't mean Bitcoin can't rally. Okay, but you're clearly seeing price action in the wake of FOMC that is impacting both small cap equities and Bitcoin. Now, it needs to digest the higher for longer narrative, which I think will be here. And for the record, I continue to think at this point you're not going to get a cut even before the election. I could be wrong on that. Maybe you get a December cut, maybe right at the end of the year. But I think what Powell seemed to suggest, and I know people put too much emphasis on him, and I agree with the fact that you should probably just ignore most of FOMC. But what he's basically telling the market and disappointing them once again is that cuts aren't close. And despite the constant pricing in, the market still prices in multiple cuts for this year. So that's just my view. I think if you want to look at the correlation, you can't look at equities broadly. You have to look at the correlation currently between small caps and Bitcoin, because I think that explains interest rate sensitivity more so than the large caps who don't care.
Tone, anything to add on top of that?
No.
So I agree with the small cap performance and Bitcoin performance. I totally agree, but I also agree with what Tone said just now, that there is a very, very high chance, and in my opinion, personally, Tone, you said you're expecting consolidation over the weekend. I'm expecting a catch-up trade over here. Bitcoin trying to go and create a new all-time high. That's my expectation over the next week. And over this weekend, I'm expecting bullish price action. I'm literally expecting either of Saturday or Sunday to be pretty bullish. And this could be completely wrong. And the only reason I have like my thesis is NASDAQ has pumped as much as it wanted to. It's Friday. Some positions are going to be closed and people are going to get bored and they're going to be like, okay, what should I do on Saturday? And they're going to come and buy Bitcoin. That's the most weird theory you would have heard. But yeah, I'm expecting a bullish weekend. And that might end up playing in the same way. That might end up being like the MRI buy. And we know that MRI buys are powerful. So I hope it comes through. I hope it pumps after basically creating a wick down. So that's one thing. Now, in the long term, so this was a short-term price action. We are being a little bit bearish. A lot of whales have offloaded a lot of Bitcoin. So to your point that a 5,000 Bitcoin sale resulted in such a price fall. What if I add to that over a lot of whales have basically offloaded Bitcoin. So around 48,500 Bitcoins have been sold off at the recent peaks. And these are whale addresses. So that basically makes it 50,000 Bitcoin being sold.
Yeah, it's a little disappointing. Now, from what I'm hearing, is that the miners are struggling and they are forced to sell some Bitcoin. Eventually, the miners are going to run out of Bitcoin to sell. Why are some whales selling Bitcoin? I don't know. I mean, maybe Roger Ver sold 30,000 Bitcoin to pay for his, defense or whatever it is. I don't know why there are massive selling going on right now, but eventually, this Bitcoin is going to find a home for the next 4 years. It may take time. I mean, it may take another 3 to 4 months, but I still believe that sometime this year, there will be the mother of all short squeezes, and we are going to get our $10,000 God camp.
I am with you on that. I feel that it's not about when it's not about like when it's going to happen. It's like it is in the near future. It's visible. The price action is telling you that it is supposed to happen. This consolidation near all-time highs. Like when you look at a chart, guys, like as a technical analyst, when I look at a chart and I'm like, we are close to all-time highs. We know there is no resistance above it and you're consolidating. You're not breaking down. You're just consolidating. And it's a very nice looking rectangular consolidation, which is forming right now. You do not want to sell there. You wait. You basically just wait. So yeah, totally agreed. It has to come and it's not too far away. That's my opinion. It is sooner rather than later. So yeah, go on, Joe. Sorry, I just saw your hand up.
So I just want to. There was a note that came out from JPM, and then I just read a note. Literally, someone sent me from Morgan Stanley, and they all have the same theme, right? The theme is that investors have been defensively positioned despite the rally. They fought it for all the year. They're constantly predicting recession around every corner, and they're hearing from their clients across the board. The wealth managers are hearing, we need to get allocated. We need to pour money in, okay? And I think that's going to be helpful for a lot of assets. I still think people are this is such a hated rally. I mean, you can see it on FinTwit. There are people that are just convinced that the rates, the lag effects are finally taking hold, that because unemployment has ticked up, however many basis points, that is effectively enough to send the country into recession. And I'm telling you, I just don't see it right here. I think that there's going to be bullish positioning here. And I'm more confident of it now than I was even a month ago, simply by virtue of the fact that the data is nowhere close to what I think they would need to justify any cuts. And you may say, well, isn't that bearish that they're not doing it? No, it's bullish because the economy is strong, right? It's bullish because the fundamentals are strong, at least for the near term. Now, can that change really quickly? Can you have sort of the snowball down the hill effect with unemployment, which tends to happen historically, right? That's the SOM rule and all these other metrics for deciding when you start to get runaway unemployment. But that doesn't mean it needs to roll over in the next 6 months. If you're trading on like macro factors for where the country will be at in 2025, I think that's a big mistake.
No, 100 agreed. You basically have to play what the market is telling you right now. And a lot of people and remember, Joe, we had this chart that I basically was trying to bring it to the space as well. I'm not sure whether you were on that space or not, regarding a lot of new VC money flowing in as well, like people wanting to buy. So there is economic movement happening, which was being stopped in the last couple of years, and now it's starting to come. The money is flowing again, and yeah, a lot of big players, they want to get allocated. Lot of big firms are setting up new desk just for crypto. Like, it's visible. So I'm not expecting Bitcoin to stay here for long. I'm not expecting Bitcoin to be going lower. And obviously I can be wrong, and I can be proven wrong tomorrow morning. Bitcoin could be sitting at 20K tomorrow morning, and I might get the other side of the picture, which is not possible. But yeah, just saying.
Yeah, and then the other thing, right? There is geopolitical instability. I think I keep hearing things about Ukraine heating up. That's an issue that could be something that the market is not pricing in. You've also got the issue of this debate, which Tony and I haven't had a lot of chance to talk about, but I continue to believe that this debate on the 27th is the make or break debate for the Biden campaign. My view is that if it goes bad for him, really bad, I think he gets swapped. I think that there's already pricing in some of the prediction markets. My friend Matthew Pines was just tweeting out something the other day about how there's like a 1 in 4 chance now that pricing in Biden does not win the nomination when there's no other candidate in the race. This debate, which is the earliest debate in modern presidential history, I think is a calculated effort to recapture momentum because the polling's turning away from the Biden administration. And it is, if he does not perform, if he does not meet the very low expectations that have been set for this, or if there's a gaffe, or if he forgets himself on stage, whatever happens, I think that if it's negative, that you could see a change up in the presidential race, which also is not priced into the market.
Yeah, I mean, did you see the video of him? Go on, Tone.
I got a follow-up. So, if there is a change, Biden gets replaced by another candidate, and we're speculating here, and we don't know who that candidate is. My speculation is that it'll be Gavin Newsom. That's just me. What do you think happens to the market, Joe? Do you think that's a bullish news or bearish news?
I think another candidate, just breaking it down, and again, we're speculating at who's going to be, but let's just speak in more neutral frame. If you get a candidate that is more electable than Joe Biden, which I don't think should be that hard. Apparently it is for some of the Democrats, but if you get a
it's hard. Like, for example, Kamala has a lower approval rating than Joe.
For sure. Yeah. And I don't think Kamala is the answer. But if you get a candidate that is more electable, right, that skews the odds in favor of the Dems keeping the White House, which I think the market has priced in Trump capturing the White House. So that can affect things, right? And there's another possibility, right? It's the old Will Rogers quip, which says that I'm not a member of any organized political party. I'm a Democrat. I would not at all be surprised if Biden were to step down and this was decided in Chicago at the DNC, my backyard, in August, that they have a floor fight over this, because obviously they're going to want to have speeches, they're going to want to campaign, they're going to want to fight this. That is something where it keeps the market sort of in suspense as to who gets nominated. And there are real differences, right? There's a real difference from nominating someone like a Kamala Harris and an Elizabeth Warren versus somebody like a Gavin Newsom, I think. Maybe people may disagree with me on that point. I think that the Democratic Party has a wide range of personalities, all of which do not agree on the same, economic principles. So obviously there are very hard far left people, and there are there are more centrist folks in that party. So from my standpoint, like, I think that the suspense of that and the turmoil that will come attached with that will make people increasingly hesitant in an election, right? Where, I'll just tell you my bias. Like, I'm not putting on massive positions other than my long-term holds for basically post Labor Day. I just think there's going to be too much volatility. I'm not going to trade that. You guys can trade it. It's not something I'm comfortable with, because I think it's going to be a very volatile environment that I think there's good risk reward bets in.
No, I trade intraday. So if the news comes out tomorrow, I'll short the market. So it's easier for me. But yes, I mean, even from Twitter, when I'm scrolling through Twitter or when I'm researching on the other side, like looking at what's happening, it's quite visible that US wants Trump. The market wants Trump. The only people who are trying their best right now that Trump doesn't come in is Democrats. Like, they know they have lost the battle. It's quite visible right now. And the only thing they can do something about it is either change the person who's standing or do something with the votes. I'm not sure which one is going to happen. All right, moving on. I'm not going to go controversial here. Moving on, Saylor Tone, Michael Saylor has again stepped in. He has used his invented strategy to buy Bitcoin, and he has bought around $700 million worth of Bitcoin again, right? This guy, I think he's the biggest whale. He's not a whale. I think he's a dinosaur right now, the way he's buying. And on top of that, did you guys get a chance to watch where was it? Was it Milan or somewhere? There was a BTC conference going on, and Michael Saylor was basically a speaker there. And he had a very, I can't remember where exactly it was, but he said that buy Bitcoin with the money that you can't afford to lose. And I really liked it. I really enjoyed it. So my question for discussion on this point is, first of all, is there a strategy behind Michael Saylor's investment, and what will happen when he decides to sell? Because he now holds a lot of Bitcoin. Tone, let's start off with you.
Yeah, look, Michael Saylor is able to continue to buy Bitcoin. I don't see it as a huge problem because Bitcoin is not proof of stake. Now, I don't agree with everything Michael Saylor says. And there are a lot of Bitcoiners like myself that are a little bit unhappy with some of Michael Saylor's views, but I would say he's 90% on our side, which is significantly better than the majority of the people that get into Bitcoin. I mean, look, it's a free market. And if Michael Saylor buying up all the Bitcoin destroys Bitcoin, then Bitcoin wasn't meant to exist. So I'm going to trust in the free market that this is not a problem at all.
Very well. Also, Tone, if you have your charts open, I would really like if you can compare two basically timelines of Bitcoin, 2016-17, on how Bitcoin consolidated at the very top when it was about to break all-time high, and now. Look at the similarity. I basically just saw it, and I was like, I saw it and I'm like, oh damn, it looks similar, because I was looking at the chart. I'm like, okay. So what's your view on the comparison of the expansion part of the leg of the main cycle coming in now from comparing it to 2016-17?
Well, we are perfectly in line. Bitcoin is doing exactly what it's done in prior cycles. And Bitcoin is starting off at a much higher level. So the probability that we would be consolidating for the first 6 months after the halving, or even dropping during the first 6 months after the halving, was probably slightly higher than in cycles past. And right now we are following the cycle, and everything is in line, and we can consolidate here for another 3 months before the chart starts to deviate from prior cycles.
Yeah, in that time, the RSIs on the higher time frames would have reset as well. Like right now, we are seeing monthly RSI sitting at around 67 or 70, I think. What is it? Say 67.92. And we could have reset by then, like 3 more months of consolidation at these levels. And this bull flag that is forming on the monthly chart, which as a TA, guys, bull flags on a higher time frames are not really good price targets. Bull flags, bear flags, bullish pennants, bearish pennants, these are short-term patterns, right? So they are like shorter term. You should see them in the lower time frames or medium time frames, not in the higher. But at the end of the day, it is a pattern that is emerging. And if you remember, Tone, we discussed about the head and shoulder pattern that could have formed on Bitcoin on the higher time frame. Looks like we are forming the right shoulder as well now.
Yeah, that's what it looks like. But it's such a, well, what's the word I'm looking for?
Narrow.
Here? Narrow, yes, thank you. It's such a narrow head and shoulders that it's almost irrelevant to me. I see it more as a horizontal consolidation that will eventually break out to the upside.
No, I totally agreed. But what if there is a what if, and this is a what if? What if there is a price goes down to around 46,000 area, which will basically make it valid. And we can see there is a lot of inconsistency in price over the month of February, when we basically pumped, when we rallied a lot. So there's a volume imbalance between there. So maybe we can just go in there, give it a dip, and there you go. Your right shoulder is ready with a price target, yeah, much higher than what people will accept. But it is what it is. This is what we see, and it could take years to achieve the price target, but we could very well achieve it. So yeah, just few of the patterns that I was looking at, and I was thinking, not playing them, just analyzing. So this is more chart analysis than trading the markets. Well, that was it from me, Tone. Any topic that you want to discuss with Joe? Because Joe could not come in earlier, and he missed out on a few topics.
No, not really. I mean, I'm good. I'm gonna leave it for Joe. But Joe, so the only question I have is, man, I know these ETFs are driving the price of Bitcoin, but I find it a little strange that last week ETFs purchased 26,000 Bitcoins and the price barely went up. This week, the ETF sold maybe 5,000 Bitcoin and the price is getting crushed. Do you have any explanation for this dynamic? Because to me, it seems like this ratio is a little bit skewed in a weird way. I can't explain it. Maybe there'll be a better explanation in the future.
Sure. So I assume you're aware of the carry trade that's been dominating some of the hedge fund space, where
Yeah, they have been hedging with the futures market. Yes.
Yeah, they've been short futures and they have been effectively long the spot. Okay, which makes a lot of sense if you think about it. There was a spread there that they were capturing effectively for a risk-free return now, and when you have such dominant futures markets, where the futures market, by some of the volume I was looking at the other day, it was 3 or 4 times what the spot volume was. There was very limited spot volume relative to the futures market. That is just too many people on one side of the boat. And if you start a cascade down there, I think it forces a lot of selling, particularly in some of the leverage longs outside of the United States. I think those are where they're effectively closing all those non-CME perps. Those in particular, I think, are getting crushed right here, and they're hitting that liquidity. So I don't expect. I think this is more. I would describe this as a non-fundamental sell-off. I think this is more of an option sell-off, a derivative sell-off, primarily led by the positioning in that futures market. And I expect it to close, and I expect it to rally from there. And I do think that the interest rate news finally, affecting small caps and more interest rate sensitive assets was the catalyst, right? But the reaction you're seeing in the extreme nature of the reaction, I think, is because of all that positioning.
Yeah, we have seen the OI rise up as well, to be honest, on like daily time frame. The OI and the short number of short contracts have increased significantly. So I do agree, this is more of a derivative selling than spot selling happening right now. Even though there was, as I discussed, there was a lot of whales addresses selling Bitcoin, but I'll not call it selling Bitcoin, Tone. Like, how I see it is they're moving Bitcoin from one address to the other. Now, what is the other address? We can't know. We have to do more research into it, dig into it, and try to find out what addresses were they. But these were whale addresses moving Bitcoin. That's a better way to say it. So this could end up just being, a liquidity grab from the futures market, and then we could end up just rallying back to the prior highs that we have created. So I'm not looking, as I said, I'm expecting weekend to be bullish. This is my expectation for the
Yeah. Well, just realize, and I remember watching this when Bitcoin used to be really crazy volatile, a lot more so in 2016 and 2017. That when those shorts pile up and you move the other way, okay, you can absolutely rip, to Tone's point. I remember in particular, I think it was in the fall. I want to say the fall of 20. It was either the fall of 2018 or 2019. I think it was 2019, if memory serves. There was this period, it was like October, where Bitcoin like randomly doubled on this insane short squeeze because there was so much short positioning where it ripped to like over 10,000 from like 6 or 5 within like a few hours, just because of the crazy positioning in the short side. And I actually view those shorts and the futures as being very bullish. I mean, if you start reversing in the other way, you can have an epic squeeze. I mean, I'm talking within days. I think you could rip to an all-time high. Now, to time that, I don't know. It's going to be challenging. But the pileup of shorts is what you want to see, because that's the rocket fuel to take us much higher.
100%. So last topic, I forgot, and we have the two best people in the space right now to ask this. Roaring Kitty. Don't wanted to talk about it. I stopped him because I wanted to talk later, and then I forgot about it. Well, from the time we did our last space, a certain individual came back. He literally pumped a meme stock like insane. Made money or did not make money yet is unclear, right? Let's start off by with Tone talking a little bit about Roaring Kitty, because you might have experienced his previous hurrah as well, Tone. So first of all, let's start with you, and then Joe, I'll bring you in for a little bit of legal understanding of what has he done. Is it going to have any repercussions for him in the future and all that? So Tone, over to you.
Yeah, honestly, I couldn't care less. I mean, I don't care about this. I know some people trying to make a big story out of it. It's I mean, I really don't care. It's I know that the GameStop was like over 100% shorted, and I don't know how it got into that position. I think it's, regulators not doing their job, regulatory capture that allowed for the situation. I think it's kind of good that the average person gets to stick it to these big hedge funds and corporations, but I honestly don't care. Like, it's not. I just don't care. Maybe Joe has something more enlightening to say about this, but I don't know. This whole story doesn't interest me at all.
Well, Tone, at one point of time, the guy was up $600 million. He literally showed
again, not something I care about. Like I don't care. I don't care how rich other people get, or how poor they get from making stupid decisions. Like, it's just not something that I go to bed thinking about. I just don't care.
That's
I don't know. Joe, you have a more enlightening answer to this?
No, I mean, I tweeted out that if you think you're sticking it to the man by buying up a stock, basically giving them all your money, and then allowing them to dump on you by issuing new shares, more power to you. I mean, that's you're right. They donate your money to whoever you want to, but you've built them a war chest for a company that was on the verge of bankruptcy, of billions of dollars. And the smartest thing they could do is go out and buy other profitable businesses that won't, be on the way out. Now, with respect to him in particular, as a cult personality, I think the image and persona that he has perfected is completely fabricated. I don't think he is as aloof or, silly as he kind of appears. That's all an act. He's a very bright individual. He understands positioning better than most people that are working on Wall Street. And I think he has successfully really put a lot of people off sides. And that's what you want to do in a market, particularly if you're a big player.
And do you think
I got a call. Sorry about that.
Okay, no worries. Well,
Yeah, I gotta get going in a minute as well.
okay, no worries, guys. So just last question, Tone. Do you think, like last time, SEC is going to go for him again for market manipulation in some way or the other, and stick it, show him that it's not good to do it? Because last time he got saved, he was smart.
I never understood this market manipulation. He's not with the company. He is allowed to disclose his positions. He is effectively not giving anybody advice to do anything. He's talking about what his position is. And because he has a cult personality and because people like him, that's market manipulation. I mean, how is that any different than what any private citizen goes out and says, I like the stock? Like, I mean, I don't understand it. Just because people place him in high regard and think he's smart. That's not market manipulation. Is Michael Saylor manipulating the Bitcoin market when he's saying that we're just going to keep issuing stock to buy Bitcoin or borrowing to buy Bitcoin? I don't think so. I don't understand this market manipulation. I think it's one of those things where people want to shake their fist and yell at the wind.
Well, if the SEC is going to come after him for market manipulation, then this is another example of SEC's gross incompetence and why perhaps this agency should not exist. Where I've been on the side of the SEC quite often. I think there is a very good function that the SEC should be serving. Unfortunately, they have not been serving the function that benefits society. And I can say the same thing about the FBI and many other government agencies. They are supposed to benefit society, but instead they are deteriorating society. And another example for my massive list that I should be tracking into the debate of Joe, why the United States is going to split up.
So just as I'm curious, Tone, I know you got to go, but real quick, tell me, because I don't really fully understand this, what do you think the SEC should be doing that they're not doing?
Closing down Ethereum.
Well, for starters, if this was the only stock or one of 2 or 3 stocks out there that had like 150% short capacity, how the fuck does that happen? Like, that is something the SEC should have been dealing with long before some cat on Twitter decided to take matters into his own hands.
That's true.
So just so I'm clear,
And now
you think that,
and now the SEC is going after him.
you believe that the SEC should have a rule or directive that bars more stock from being shorter than it exists. Is that what I hear?
I mean, I haven't directly looked into it. I actually didn't know that was possible prior to this situation.
I'm just wondering if you, from a policy standpoint, do you think that's a good policy to have that as a bar?
I do.
Okay, and that's fine, right? And I that's a good answer. I actually, I sort of agree with it. I mean, but I mean, aside from that, like, they haven't actually taken action against Roaring Kitty, right? So you can't really
Not yet.
accuse them.
Yeah, not yet.
Yeah,
I think they will. I think they will, Joe. I think they will.
I don't think they will. I don't think they will. I think the SEC would be ripped to shreds if they did, because then everything that we do here in this space could be considered a violation of the SEC if they did.
True. Joe, you wanted to speak something. Sorry, I interrupted.
No, I was just saying, like, look, I mean, I think you could make an argument, and it's funny because I go into different spaces and I hear people arguing about how the SEC needs to let everybody do their own thing and leave them alone, and then other spaces are saying SEC needs to clamp down and shut this down. And it's like Tone shared one time this picture of the guy and the donkey, where, like, every single thing the guy did, he put his wife on the donkey. People said, "How could you be so cruel to the donkey?" Or, he dragged the donkey by his neck, and the critic is yelling, "Don't drag the donkey! It's an animal. Like, it should be free." Like, literally, like, when you're in positions of power, no matter what you do, you're going to have a certain group of people pissed off at you and angry. Maybe you remember what I'm talking about, Tone. But I just think it's like one of those things where, like, it's very easy from the peanut gallery to go tell people that they're doing a piss poor job. The reality is the SEC has filed a ton of litigation, some of which they've lost, some of which they've won. They've had different chiefs that have been in there, different heads of the SEC that have taken different positions, and that's, like, really difficult, right? When you come in as Gensler and you have predecessors like Jay Clayton who took one stance for crypto, you're kind of locked in institutionally, and it will be cited against you what the predecessor did. I mean, it's not easy, guys. Like, and it's really easy to criticize. It is not easy to actually do the job. It requires convincing judges that you haven't been taking contrary positions over the years, and you have to answer for what your predecessors did when you weren't even in the role and made different decisions. So everybody should just keep in mind that when they're criticizing the SEC.
Got it. In our spaces, we'll not criticize them, but yes, till the time you don't shut down Ethereum,
No, you can criticize.
you're not
That's not what I'm
fucking-
saying. You can criticize them. You can criticize them all day long. I'm not saying that. I think that's
No, all
legitimate.
I'm saying is till the time they don't shut down Ethereum, I will criticize. Once you have done that, that's when we talk. Because for me,
I mean,
Ethereum.
like
Yeah,
let
on.
me just give you an example. If they were to file suit against the Ethereum Foundation, you'd have half of Twitter cheering, and you'd have the other half saying they're despots and they're dictators that are being irrational and they're hurting freedoms of innovation and all this other crap. Like if there were a suit filed tomorrow, then the other half would say, oh well, why'd you let the spot Bitcoin or spot Ether app get approved? And they'll say because we had to, because the courts said we had to. It's like what do you want them to do? They're not kings, right? They're not monarchs. They can't rule by decree. They have to convince the judge of their position.
Yeah, no, true. That's it for today, guys. Thanks a lot for your time, Joe. Thanks a lot for your time, Tone. I know we've been missing for a couple of weeks, but we will be back midweek next week. Tone, I hope you'll be back to Panama by that time.
No, the opposite. I'm in Panama now. I'm gonna be at my cabin for the next week at least, just working. So I'll be around.
Yeah, but we'll be able to get a hold of you, right?
Yeah.
Lovely. Joe, talk to you next week. Take care, guys. Take care, everyone. And thanks for joining.